What does the IRS really allow you to deduct from your taxes? There's different types of deductions. There's business deductions, there's itemized deductions, but for this video, we're just going to talk about business deductions specifically. So the IRS actually has a great publication for this. It's Pub 535. I'm going to give it the highlights here. Among that information is going to be what you're generally allowed to deduct. So the IRS allows you to deduct anything which is both ordinary and necessary. So it has to pass both tests in order to qualify. Now, the terminology there can be a little bit confusing because the first part is ordinary. Okay, that's kind of clear. The second part though is necessary, and I think people will hear that and they assume that what that means is they can't deduct something that isn't quote unquote necessary. Well, in that IRS publication I just mentioned, there's a clarification in one of the paragraphs. An expense does not have to be indispensable to be considered necessary. An ordinary expense is one that is helpful and appropriate for your trade or business, and a necessary expense is one that is common and accepted in your industry. So you'll notice with both definitions, we have industry, trade or business coming up. So there might be some businesses that can have an easier time taking a deduction than another. Now, as long as something is both ordinary and necessary, generally you're allowed to deduct it. Now, you're typically not allowed to deduct personal expenses, but if you have something that is both business and personal, you can separate the business portion from the personal portion, and you can deduct the business portion via a percentage. Likewise, there are some expenses that must be capitalized instead. The most common example of this would be an automobile. If you buy a car, you don't just write off all the costs right away. What you do is you capitalize the expense, you depreciate it, and so you claim the expense over time. This can also apply to the startup costs of your company and a wide variety of other situations where you're required to capitalize the expense instead. But there's no need to overthink it because this simple definition makes it easy to discern 80% of your acceptable deductions. As long as you're not sneaking personal things in there, as long as you're not deducting entertainment, you're explicitly not allowed to deduct that anymore. You used to be able to. You probably don't have too much to worry about. I would be much more concerned with making sure that your accounting for your expenses is as accurate as possible. And you can accomplish this largely with a few simple steps. Number one, you should not be commingling your business and your personal expenses together in the same accounts. You should have an account specifically for your business and have other accounts for yourself that are completely separate. Now, if you have an LLC or another business entity, your business entity should be the owner of your bank accounts. Some people will say, well, I have a credit card that I only use for business expenses. Well, if the statement for that credit card is going to you personally, then it's really not a business credit card. You might have designated it, in your own mind, but from the IRS's perspective, they're going to look at that statement and go, well, Mr. Jones, this is not your company's credit card. This is your credit card. And there are situations where it can be hard to claim deductions that were run through that account because they weren't paid for by the company. They're paid for by you. And once you have business bank accounts set up, once you have business credit cards and you've completely separated your business and personal expenses, now you can do accounting. You can have a QuickBooks file and you can put your business accounts on that account and you can reconcile all of your business accounts. And in all seriousness, if you want to be a successful business, you should be doing this anyway. It's really part of the foundations of your business. I've used the analogy with clients before, when you go driving in your car, you have to have your license, your insurance, and your registration with you. If you don't have a set of business books, it's almost like you're missing one of those things, like you don't have it with you, and that can lead to problems. So it's one of those things that you should just have, and if you don't have it, you're watching this video, you should probably work on that. That's gonna do it for this video. Simple definition of what is an acceptable deduction for your business. If you want to learn more about taxes, check out our website at rottweilertax.com, but also check out our friends at reallifetrading.com. They teach people how to trade stocks, which is how I got connected with them. I wanted to learn how to trade, and so I learned through the RLT and through our community. They're some of the best people I've ever found as far as teaching people how to trade stocks and how to read the patterns on the charts. So if you really want to learn, that's definitely the place I would go for that particular subject matter. Hope you enjoyed this video and hope you learned something new. We'll see you in the next one.